Today is the first Friday of the month. It's August 7, 2026. So, the first Friday of the month is typically when the US unemployment report comes out. So, this week we're going to be watching the unemployment report quite closely because the market has moved into a mode where good news is bad news and bad news is good news. So, what do we mean by this? So, if we get a very strong number, meaning many jobs have been created, unemployment is going down, employment is going up, we might see this as good news. However, this also means that the economy is in a very good place, and therefore, the Federal Reserve or the central bank of the US can actually increase rates, what we call a hike. Now, the market has already been pricing some of these hikes. However, with the new Federal Reserve Chair, Kevin Warsh, we really don't have much direction as to which way they will decide. Now, given that scenario, the market is pricing their own situation. So when the market starts to become cautious, then we see the 2 year bond yield, treasury bond yield, start to go up. Over the last 3, 4 days, we've actually had quite some bad news. So we've seen hiring freeze. It's not coming down, but it's not moving either. So that's bad news in a sense that employment is not growing. So that sort of gave the market an idea that if this trend continues in employment, then the Fed will not hike rates. So it remains to be seen what today's numbers bring. But basically, right now, what we're seeing in the market is that everything that pushes the Fed towards hikes is basically pushing the market lower. It's pushing the dollar higher. And that could also mean oil prices. So, important to keep an eye on all these factors to see which way the market is headed in the next couple of weeks.